that OBR forecast and all the numbers could not forecast what happened that week. And then loads and loads and loads of mortgage deals were pulled just a couple of weeks ago. They're having to borrow money to be able to pay the bills, essentially. Hi, and welcome to the Money Minder podcast. Once again, I'm joined by my friend and long-term former BBC presenter, Melvyn Prior. Today, we're going to be talking about the spring forecast that was only at the beginning of this month, but most people have already forgotten about, and also how things that happened recently might be affecting what we were hearing only just a few weeks ago. Melvyn, hi, how are you doing?
Yeah, very well, thank you. Yeah, the spring forecast, we'll get onto that in a moment, perhaps, but I want to just start, if we can, with yesterday's news about interest rates, because a couple of weeks ago, we were perhaps looking at interest rates coming down. Then, with conflicts, which we'll talk about more in a moment, yesterday there was a possibility interest rates could have gone up, but in actual fact, they stayed where they were. So, what's going on here?
So, yes, the general thought, both here and abroad, was that interest rates would start to come down again because inflation was starting to be less of a long-term problem. In truth, it hasn't really changed much. But the cost of borrowing is a problem, and that affects house prices and the amount of money that people have got left at the end of the month after they paid their mortgage and car loans and credit cards and all those kind of things. So bringing interest rates down helps to stimulate the economy, especially when economic growth's a bit weak. So it's a stimulator. Of course, then what happened was we had this whole thing with oil prices and the Strait of Hormuz and oil costs going up to $100+ a barrel. And so now all the central banks around the world are panicking and thinking, oh, what's happening next? Do we think inflation's going to kick off? Because if we think inflation's going to kick off, we'll have to put interest rates up. But hold on, if we put interest rates up, that could cause us more problems with the cost of borrowing and the amount of money that people have got left at the end of each month. We really ought to be putting interest rates down. But, we can't really do that either because that might spur off inflation. And so they've ended up being a bit stuck, Melvyn. They're just stuck. Let's see what happens over the next few weeks because nobody really knows.
No, and do you think some of the markets were, well, 2 weeks ago, thinking to themselves, okay, rates are going to come down. People might have invested in something thinking the rates were coming down. It's all up in the air at the minute, isn't it?
The worst people affected, I imagine, right now, apart from those investors that have seen their fund values potentially come down, particularly those that are fully 100% invested at the moment, they'd have noticed that over the last few weeks. But more stressful than that, potentially even, is those people that were just about to buy houses because it's spring, seasonal, isn't it? People buy houses around the springtime. Everybody's looking to get into the new place for the summer, and so there's this activity that comes around February, March time, and then loads and loads and loads of mortgage deals were pulled just a couple of weeks ago. They're going to be the ones that are going to be most concerned, I suspect, at the moment, because all of a sudden their mortgage payment that was going to be X could now be Y, and it could be as much as 300, 400, 500, 1,000, depending on how much they're borrowing, £1,000 more each month. And all of a sudden that puts at risk the whole idea of even buying that property.
But I saw some of the front pages this morning, and they were very much doom and gloom with regards to the mortgage story. But the rate stayed the same yesterday. So are they just anticipating that the rates will eventually have to go up then? Or are they thinking we can make some money here?
So very quickly after this conflict kicked off and oil went up, there were lots and lots of fixed rate deals pulled. And because they're not there anymore, those people that haven't quite completed or were just about to complete, potentially, I mean, some of the deals might be honoured, but some of them might just say, oh, no, sorry, you weren't quite close enough and you're not getting that deal anymore. And that's going to be an increase of. So for those individuals, it'll be now sitting back in the chair thinking, oh, can I actually afford that extra £300, £400 a month because of the new deal that they're offering? And equally, the same with oil prices and interest rates. And the problem that the bank have got at the moment is they're trying to figure out what's happening next. What happened yesterday and what happened 2 weeks ago and two years ago, well, that's all in the past, isn't it? It's gone, finished. What they're worried about is what happens next. And if oil prices continue to rise and there isn't any solution to that, then that affects everything from an inflationary point of view. And the normal way, they might have to change their tune a little bit on this, but the normal way that central banks handle inflation is they put interest rates up to stop people spending quite so much. Because an inflation issue is normally the economy spiking, that everything's going really well. Everybody's buying Prada handbags because it's and classic cars because things are going really well. And that's normally an inflation pressure. That isn't from that. The inflation pressure that we're seeing is from resources. And similar to what was happening with COVID period of time, it's that whole idea that the oil can't get through to its destination at the moment. So there's less supply than you'd really like. What is interesting though with all of that, and it has been mentioned on the news, but I've not seen them take into account and reflect on how it affects the globe, the world. There is only actually about 20% of the oil that goes through the Strait of Hormuz, a fifth. That means 4/5 comes from somewhere else. So even if you can't get your oil through the normal channels that you would expect it to go through, well, potentially there are 4/5 coming from other places. So maybe some, particularly ourselves, who we're not independent at all on our energy, unfortunately, and many countries aren't still. We might just have to change where we get it from and how we get it, which might make it more expensive, but we'll just have to change and adapt because that's what we do.
And it's interesting, we talk about uncertain times. 2 weeks ago when we had the spring forecast, we didn't know what was going to happen over those next 2 weeks. You can't predict the following 2 weeks, can you? Keep our fingers crossed. Hopefully things will start to settle down. But this is having a global effect, isn't it? So are other countries feeling the same sort of pressures that we are at the moment?
Yes, they will be. But the interesting one in my mind at the moment, and it is genuinely interesting in my mind, is that Mr. Trump started the whole thing off. Didn't tell anybody that he was going to do it, it seems. Just decided that he was going to bomb Iran. And I'm sure somebody must have said to him, that puts the Strait of Hormuz at risk and you might not be able to get some oil through there. And his next question, if he was switched on enough to ask it, would have been, well, how much oil have we got coming through the Strait of Hormuz? And a reasonable answer is less than 2%. He actually said on the telly the other day, less than 1%. I think he's undercooked that. That's because he was wanting other people to get involved. But it's actually nearer 2%. But what's really interesting with them, I think, is that although he doesn't think he needs the Strait of Hormuz, the reason that he doesn't think he needs it is because 60% of the US oil comes from Canada. And they're quite, or have been in many years gone by, they've been quite closely aligned. And a big chunk of Canadian oil is going through pipelines to the US that they use. But not only is he upset the Iranians and a few others around the world, he's upset Mark Carney.
Yeah, he's not been great friends with Canada over the past few weeks, is he?
At all. Not at all. No. And Mark Carney is a switched on chap. Some of our viewers will remember that he was the Bank of England governor. And I also understand, I think he was the Bank of England, the Bank of Canada governor at one point as well. Speaks fluent French, so has some pretty high up European connections, has connections with the UK, has connections with Australia. He went to school, university. He was at Cambridge with the opposition leader in Australia. He's just been out and done an address with them recently, where it was a really motivational speech as well. They're talking about Australia and Canada being resources countries and how much they're aligned, and the connection between both countries having kind of Westminster principles from their background many moons ago, having adapted that to fit their own populations, and how closely aligned they are. So all the time Trump is off being a bit aggressive with the rest of the world. I think that's probably the easiest way for me to say it. While he's being aggressive with the rest of the world, Mark Carney's been in the background doing deals with other countries. Now, there's big tariffs now from Canada to America as well on the oil. And Mark Carney came out publicly recently and said, we will send less oil and gas to the US. Our plan is to reduce the amount we send to them. So whilst he's not wrong that he could say there's only 2% of our oil comes through the Strait of Hormuz that we're using in the US, if 60% of it's coming from Canada and he's upset the Canadians, well, he might be more reliant on the Strait in a few months or years' time, because otherwise the cost for him to import from Canada is going to be more expensive. Plus, we've got an agreement called the CPTPP that was set up in Rishi Sunak's government, which is all about Canada, UK, New Zealand, and Australia are all working more together. And it got expanded. Japan and India, a few others are in there. And that's completely aside from any deals that we've got with Europe or any deals that we've got with America as well. So there are already the structures in place to be able to get potentially our oil from other places rather than what we get it at the moment.
Interesting when we talk about the world as a whole and how the structure is it just historical that oil is priced in dollars?
It is historical. Goes back to 1975, when the Americans went over to see the OPEC countries. It was Kissinger. He did a deal with the Crown Prince in Saudi Arabia and said, we use a lot of your oil. We want to continue using lots of your oil, but we want you to do something for us so that we continue to use it and it's more easily for us to buy. We want you to price it in dollars, please. And it was 74, 75, mid-70s. And they agreed. They all got together. The OPEC countries said, yeah, fine. And that was what the start of something called the petrodollar was. Petrodollar being all commodities then came from that petrodollar alignment, so that just pretty much everything, fertilizer, corn, wheat, barley, all the commodities of the world are pretty much based in dollars wherever you live, because in the past, with the dollar being the global reserve currency, it was easier for everybody to trade with. So the historical connection is Kissinger.
And the products and the commodities you mentioned there, a lot of those coming from areas where we've got conflicts. You mentioned wheat and grain and those sorts of things. Ukraine, we've still got the Ukraine conflict. We've still got Gaza situation. This is not just, well, Iran as sort of literally happened over the past couple of weeks in its intensity. But goodness me, we've got conflicts going on. We mustn't forget the ones that have been going on for longer.
Yeah, and we've also got conflicts in essentially currency wars that have been going on for some time as well. One of the biggest exports that the US have been responsible for over the last 15, 16 years is inflation. Because when they keep printing money, that reduces the value of the dollar. The value of the dollar comes down and the cost of stuff goes up. So when you want to buy, whether it's ignoring the supply and demand issue for just a moment, gold's a really good example. We all know that gold's had a wonderful run over the last 2 or 3 years or so. Why? Why has it gone so well and gone up so much over the last few years? Well, part of the reason is because something that Biden did when he was president was he switched people off the SWIFT payment system. He switched the Russians off the SWIFT payment system, so the Russians couldn't sell their oil and gas to the rest of the world in dollars, because the SWIFT payment system is a dollar system, a bit like a switch card system. There you go, I'll switch it, but I might be spending pounds, you might be spending euros, someone else will be spending rupees, but it all goes through in a dollar switch system. And Biden overnight, when Russia invaded Ukraine, just went, pop, you're not using that anymore, and turn them off, which concerned a lot of people, particularly the East as well. And said, hold on a minute, we can't buy any oil from Russia anymore because some old chap in America's just turned them off the SWIFT payment system. That's it. How are we going to do that? And what Putin did in the early stages was he said, all right, you can't buy oil from us in dollars anymore, but you can send us gold, you can send us silver. We'll take anything like that, any hard currencies, that'll be fine. We'll take that, and we'll work out another system later, which they've done. We've now got something called the BRICS payment system. So it bypasses the dollar altogether. And there's even a new currency being drafted and put forward to go alongside it, which is the proposals are, it's called the unit, but it'll be ended up being called the BRICS coin. That's what it'll be. The BRIC coin. It'll be BRICS, BRICS coin, rather than Bitcoin. BRICS coin works on the same kind of technology.
As the same technology as a Bitcoin.
Yep, exactly the same technology. But will be backed by, in the proposals, 40% gold, physical gold in vaults, maybe in Shanghai or maybe in Cape Town or maybe in Moscow, but there'll be or Delhi, but there'll
not
be
necessarily America then.
No, definitely unlikely to be America. But physical gold, 40%, and then 60% backed by the currencies of all the different countries in the BRICS trade group, which has now gone from six to 10, and there's 10 other partnership countries as well. The BRICS trade group, if you like, is something like 41% of global GDP. When you combine them all together, it's absolutely huge. It's massive. And all of the work that China have done over this last 15 years or so, since about 2013, that Xi Jinping's put in place, what they call the Belt Road Initiative, means that products can get across this part of the world, from China right the way across to us. There's 75% of the population alive in the world today, all covered by infrastructure and developments that have been mainly pushed from China over the last few years as well. It is a changing world, Melvyn.
And are we involved with the BRICS system at the moment? Or could we be involved? Or haven't we got enough to give?
We're not, but Mark Carney's just been over and done a deal with the Chinese direct. The French did a deal with the Chinese direct, a trade deal with the Chinese direct only 2-3 years ago, something on those sort of lines. We do have that CPTPP agreement, which is almost a bit of a side door potentially. It doesn't involve Europe and it doesn't involve the US. It's the Comprehensive and Progressive Partnership for the Trans-Pacific Partnership, something on those lines. CPTPP, terrible bunch of words all put together. But the theory's all right, that it's different countries that we've got a trade group in place with. So maybe that's a bit of a side door for us to trade, particularly with countries like India, who I suspect, just an opinion, but I suspect over the next 20 years could easily become the new China from a manufacturing and technological point of view, on the basis that the Chinese population is getting older and they didn't have so many children as they used to have because of the one-child policy. So the demographics in China are changing, but India is still a fairly young country with a big population and some very capable individuals. You look at the amount of tech work that's externally given to Indian and Pakistani type businesses, where they've got 100 plus staff, and they're all top of their game on AI and all the other website work and internet work that they're dealing with.
Could we see then more Indian-made cars in the UK, as we're seeing lots of Chinese-made cars at the moment? I mean, every other vehicle I see at the moment, I think I've never heard of that brand.
Yeah.
We've got lots, haven't we?
Yeah, that one makes perfect sense. They're not there yet. That's not something that the Indians really, I mean, I've yet to go, but I have seen the pictures of some of the old vehicles that they're running around in
You
India
don't want
on,
them then?
and the tuk-tuks.
Yes.
So yeah, no, they're not quite in the car manufacturing stage at the moment, but yeah, probably in time.
Yeah.
I did hear the other day though that BYD, which is the Chinese EV Tesla effectively, but a lot
Yeah.
cheaper. And I've got a few clients that have got BYDs and really like them,
Mm.
genuinely like them. I heard the latest BYD that's just been released charges in 9 minutes.
Wow.
That's
And
a
that's
change in
what
the world.
people want, isn't it? This is the argument against sometimes. How long will you have to wait? And of course, the other side of the coin is if you're on a long journey, you'd go and have a cup of coffee anyway. But to get to that sort of speed of charging is incredible, isn't it?
Yeah, a close friend of mine took an EV car to Cornwall one time from Lincolnshire. Soon after he'd got it, and he had it a couple of weeks. Took him 12 hours to get there and back with all the charging on the way. It's just, no, no, that's not good at all. It's brand spanking new, nice.
Yeah.
But yeah, so that's challenging. 9 minutes is obviously a lot better. But we've also got hydrogen cars coming. You can buy a hydrogen car now. Toyota have got them out. The difficulty at the moment, like it was with EV chargers, you originally you didn't have enough places to charge.
No.
Last time I looked, there were only 15 garages in the UK that you could fill up a hydrogen car with. And the nearest one to us is Nottingham, which for me is about an hour away. So by the time I got there and got back, I'll be able to go back again to fill up. Almost. No, to be fair, that's not right because the ranges on them they're similar to a petrol car. You can talk 500, 600 miles to a tank. But I think that'll develop. The one thing that, of course, whilst and you'll hear people say this because it's just they will. Oh, I'm so glad I don't have to go to the petrol pump to fill my car up anymore. I just plug it in. Well, because of the price of oil, that's fine as long as you're charging with solar panels. But actually, if you're filling the car up, charging the car up with the grid,
Mm.
with power from the grid, what's the grid running on? We just this week actually, been a locally. Just this week, there's been a complaint about the idea of using one of the local power stations to be fed with chicken waste. And I understand it's a bit smelly, to be fair.
Yes, I've had some on the allotment. It does smell a bit, doesn't it?
Yeah, I don't know what it's like when it's burning and when they use it for energy. I've not been close enough to one of those to do it.
Mm.
But people are very quick to complain about the idea of that because they don't want it in their yard or in their eyesight. But equally, they won't want to pay 170 or £2 a litre of fuel either. So
Mm.
it's a challenge to balance everything out all the time.
It is indeed. I want to just take you back to something you did touch on earlier, gold and silver. And yes, I've noticed the price and value of gold, and I've known people that have sold gold items and they've done very well, and silver items. Why don't we all just invest in gold and silver then?
The price of gold can be quite volatile. It can fall just as quickly as it rises.
Okay.
Just in the last couple of weeks, we've seen about 15% drop in gold prices recently. It's still compared to what it was. There was a plenty of buffer going in. Who knows? That might be an opportunity to get some cheaper gold than there was just 2 months ago.
Mm.
But you should never have all of your eggs in one basket anyway. There's always the point of being diversified. So our investment clients have, in the majority of cases, 90 odd percent of cases, got some exposure to gold, silver, precious metals, oil, infrastructure metals, gas, some agricultural stock as well. But they've also got exposure to loans to companies or property or equities in places like China, the Far East, Japan, where those economies are actually doing really quite well, or have been. Certainly in the last few months, some of those funds have done really, really well. So it's about having the fingers in pies approach. You should never put all of your eggs in the one basket.
And I suppose that comes to the point of opportunities, that when the markets are low, it's an opportunity to buy more units, if you like, that you hope then will go up and you'll have more units and the whole portfolio goes up, doesn't it?
Agreed. There has been, particularly over this last 2 or 3 years, a real keenness to buy the dip. Buy the dip. Was £1, now it's 90p a share. Buy the dip, buy the dip. And that can work and well, but unfortunately it's very difficult to time bottoms. Example, let's take 1999 and the dot-com boom. I started warning clients about that at the end of 99. Moneyminder was very young. I was much younger too.
You've always been young.
At heart, Melvyn. That end of 99, I mean, we'd seen some exceptional growth. A bit like how we've seen some of these AI companies grow over the last 2 or 3 years as well. Exceptional. And nobody ever thought it would go down in value. But actually, once it started, there was a big dip in the early 2000s, but it didn't stop until early 2003. Markets were just grinding down for a couple of years at that point. The bottom of that was an exceptional time to be buying, but trying to time it, that's not a good idea. But if you are, as those shares, if you've got cash and as those shares are going lower, you are buying in, then that could be, over the longer term, a very, very good return. But just be careful trying to time bottoms and tops. It's about long-term investing, diversification, and yes, there are now and again, I've lived through 4 once-in-a-lifetime events, the black swan events, as they call them, that they say,
Well, you've had 4 of them. You're not very lucky then, are you?
well, you have too. and they're all this idea that this is just unexpected. But we had 199 through to early 2003. We had another one in 2008, end of 2007. We watched Northern Rock go bust. By spring of 08, I was writing to all our clients saying, you might want to take some profit off at this point. You've heard of credit crunch. I don't think it's going away. That was actually helped by me being in America for a couple of weeks in late March, early April, and seeing exactly what was going on at that point. So, and that didn't stop going down until 2009. Then we had a bit of a dip in 2016 with Brexit. Then we had COVID. Now that was quite quick to go back up again. But then 2022 was up and down like a yo-yo. So yes, there are absolutely opportunities. There are always opportunities that arise, but level head, keep calm. And when there are opportunities that come up where you say, actually, the underlying income and growth prospects for this company are really good, or this fund is really good because of where it's invested and how it's invested. Does it look a bit cheap at the moment? Yeah, great. But do it as part of a structure rather than just buying every single dip, I would guess.
We'll come back to some of those points at the end of the podcast, but we want to really touch also on the spring forecast that was only a couple of weeks ago. We were both away at the time of the forecast for the actual forecast day. Before we went away, though, we were having this discussion saying, well, I wonder what's going to be in the forecast. There were no spoilers. There was no information coming out, was there?
None. I wonder why, Mel. Could it have been anything to do with the terribly bad press that the government got in November, do you think?
Could be.
I mean, there was leak, and in actual fact, we both said at the time when we did the autumn budget discussion that there was so much fear mongering going on and opportunistic video channels, opportunistic social media adverts, because something was leaked that seemed controversial, didn't look very good at all.
Well, they had press conferences to officially leak things, didn't they? You
Yeah,
know,
they did. Yeah.
what's going on with that?
But this time around, they didn't. And I was quite, because we had in our diaries, we would do because we were both away on the actual day, we said, oh, well, we'll do something the week before, because there's bound to be something. They normally let something leak out. There'll be some comment about it. And there was nothing, was there?
No,
Just
nothing
really
at all.
quiet. Quite nice, really, in that respect.
It was, but then you were saying you were keeping an eye on the news, as we all do, even if we're away doing other things, and there are no real headlines either. I mean, we've had time to look back at things now, and I mean, a couple of the sort of takes from the spring forecast. I suppose we could start with the tax take, if you like, is at high level, isn't it?
Oh, yeah, pretty much as high as it's ever been on record at the moment. It's
Mm.
nearing 40% of GDP, the turnover of the UK economy that goes into the tax take, as it is very high.
And when we hear these sort of headlines, so you've got the fact that borrowing is high as well. So what's going on in that? What is the government having to do at the minute?
The welfare bill's gone up a lot. So that's now over 400 billion, which on current GDP being around 3 trillion, that's around 12%-ish, something on those lines of the current income as it is at the moment. So they're having to borrow money to be able to pay the bills, essentially. And this month, it was just on the news yesterday, actually. This month, it's the highest, over 14 billion. It's the highest borrow in February since records began in 1993. Chunky.
Wow. Wow. And what needs to be done to change that then?
We'd like some more growth, Melvyn. That would be lovely. Unfortunately, this is now sounding like a real pessimistic discussion. There's going to have to be a bright side coming before long as well. But unfortunately, what the OBR forecast was growth going down from 1.4% to 1.1%, I think it was, something on those sort of lines. So that's us going backwards. And actually, we really need to be treading forward, because if we're treading forward, then the tax take gets higher and the borrowing becomes less, because you are actually able then to afford all of the bills that are going out. And it's that juggling act all the time. There's a reason why I've never been a politician. To try and keep all of the people happy all of the time is damn near impossible. But that's what they're trying to do. And in reality, it's just very, very difficult to do that. So they have got some challenges for sure. And what wasn't brought out either in the spring forecast, because it hadn't happened, was through all of that, a weakening economy. Oh, and unemployment went up to 5.3% as well, and growth down. And then a few days later, oil went up to over, what was it? It was a 60% increase. Well, we're at oil at 60 odd dollars a barrel. And then when it went up to $100+ per barrel, that's a 60% increase on your original $64. That wasn't taken into account in the forecast. The OBR didn't know it was going to happen, nor did anybody else, really. It seems, which you don't know with these things. I think Mr. Trump should have probably at least spoken to a few people, including his lawyers and his allies, maybe. But hey, he took it on himself. He's winning, he says. He's winning like nobody's ever won before.
So is it that we're all paying more in tax now then?
Yeah, it is. And one of the key areas that's made that happen over the last few years is the freezing of our personal allowances. So, and it's been 12,570 for the last few years, and it's expected to be 12,570 for the next 5 or 6 years, potentially at this rate. 5, I think, as it stands. It will come out in a campaign at some point in the future, for the general election, well, that someone will work out how much worse off we are because of all the extra tax that we've paid since they froze personal allowances. And I suspect that will be quite a strong campaign at some stage for whoever it is that pulls it out of the hat.
I mean, it's interesting because you talk about the freezing there. We're going to get to a situation very soon that if somebody's on the state pension will become taxable, won't it?
We're pretty much already there, Melvyn.
Mm,
So I've got clients that are fortunate enough to have pretty reasonable state pensions because of where they worked when they worked. State pensions, not occupational pensions, just state pensions.
mm,
The wealthiest state pensioners pretty much that we ever created in this country retired in 98. And that was all to do with the contracting out and SERPs pension, state earnings related pension, that some of our
mm,
older viewers will remember. And the fact that it's over 12,570 now, if they've got no other income and no other pensions, what's actually happening, and I've seen it a few times over the last couple of tax years, is that a client will ring me and say, I've got a bill from the revenue. I've only got my state pension, but they've sent me a bill. What's that about? And I'll ask the question, well, how much is your state pension? And if it's above 12,570, you are going to get a bill because the state pension's always paid gross. So you get, if it's 13,000, for example, per year, you get your 13,000 gross. It's over 4 weeks, so it's £1,000 every 4 weeks. But the bit between 12,570 and 13,000, if you've got no other income from anywhere else, they don't take the tax from there at source that you'd think they would. They just work it out, say, oh, 20% of that little bit at the end there, the 470 quid, and we'll send you a bill for 90 odd pounds. Didn't see it coming at all. This year, from April, the standard flat rate pension goes up to something on the lines of 12,540, and the threshold's 12,570. So for just a bog
mm.
standard flat rate pension without any extras on top of it because of when people retired or the other previous history, we're virtually there. Next year, unless something happens, they will. There have been some proposals about changing that in the future, which might be helpful. We'll see in the detail about whether that actually comes through. What I do tend to find is you have to be really, really careful with the governments over the last few years. Doesn't matter what colour the government is, but they say one thing and don't always do it. Have you noticed that? I think it's a common thing.
Yes. whichever government it is, whichever
Yeah,
government. What's
yeah.
happening with regards to inflation, though? And is that a concern? Was that mentioned in the spring forecast at all?
Yeah, it was mentioned that we were getting on top of inflation, and I think the quote was the plan is working, and we were getting on top of inflation. Well, 2 days later, that went out the window, didn't it?
Yeah.
Because of where we are, and that's the trouble. That OBR forecast and all the numbers could not forecast what happened that week. So all the numbers and everything else was crunched long before all this happened. So it was already out. It was out of date the week it came out, unfortunately. So now, interestingly, if inflation does kick off for a while, that and the cost of oil goes up, that will probably mean that some people will start to consume less or do less. So they won't be going out quite so often in the car, and they won't be going down the town for a meal or a drink because there's not quite as much left over. And therefore, the demand for the oil and the gas goes down, and therefore we start to get back on top of things in time because there just isn't the demand, and the oil companies still want to sell oil, but if nobody wants it, they drop the price to try and get more sold. So weirdly, the cure for high oil prices is high oil prices. And in time, that forecast might turn around to being correct, that we now go into more of a disinflationary process, or at least inflation starts to come down. Disinflation is not helpful at all. Again, fine balances with these things. If you want to buy a TV, and we've all done this, if you want to buy a TV today and you want to buy the top-notch TV today, and you say, oh, that's lovely, it's £1,000 for that top-notch telly. And I know there are some that are more expensive than that, but let's just keep the numbers easy. It's £1,000 for that top-notch telly. Do you buy it there and then? If you need it and you absolutely need a telly, maybe you do. Maybe you spend £1,000. But if you don't need it and it's more of a wish list thing, what do you generally do about that telly? Do you buy it today, or do you wait 6 months or a year? Because then the price is going to come down again. Because technology is really disinflationary at the best of times. You think about what we're paying now for a DVD player compared to what we would have paid for it 10 years ago. It's a lot less.
Yeah.
You can buy for 2 and 6. Nobody even watches DVDs hardly anymore. Why would you want to spend a lot of money on one of those? But the disinflationary issue is that if that forecast does start to come through being correct, that actually inflation is coming down, but goes the other way, people stop spending. That's a problem for companies. But if I don't go and buy that TV, they're waiting for their money, aren't they?
Yeah. You mentioned defence spending earlier. We are spending more on defence, aren't we? But that must be coming at an expense from somewhere else. Where is that money coming from?
Some of it will be borrowing again, but actually the defence budget, I think it's 3 to 4%. I suspect that will come from taxation first and foremost, and borrowing alongside that. It's just more on the bill, Melvyn, all the time. The government are raising taxes from us just to try and keep their head above water. And right now we are still solvent as a country. That means our debt of 3 trillion or so at the moment is manageable because it's around the same amount. This is on economic terms, by the way. It's manageable because it's around the same amount as our turnover. So I'll give you an example. The US debt clock is currently stood at 39 trillion, but their turnover is only 31 trillion. So 125% debt to GDP ratio. Our own debt in the UK is about 3 trillion and our turnover is about 3 trillion. So we're 98, 99% pretty much debt to GDP ratio. So in economic terms, that's in theory manageable. There are 8 countries in the Eurozone at the moment that aren't in that situation. Greece, Italy, Spain, Portugal, Southern Ireland, Cyprus, Belgium, and most recently France. They're all technically insolvent on that debt to GDP ratio, and they just keep borrowing all the time. So everybody's in this boat at the moment of, we need to spend on defence, we need to spend on welfare, we need to spend on this. The French in particular would like to put state pension age up, but the public won't let them as it stands at the moment. And it's just a constant outgoing of costs all the time across all these countries where they're just trying to keep people happy.
Are any countries doing well at the moment? I'm just thinking the conflict, whichever one you're looking at the moment, oil prices. If you're an oil producing country and you can actually get the oil out, are you sort of thinking to yourself, great, we're making lots of money on our oil?
Well, certainly not the OPEC countries at the moment, because they're going to be mostly constrained by that Strait of Hormuz, so they'll be feeling it a lot at the moment, I suspect. Resources countries, Canada, I think, is really starting to come into its own, but that's strong leadership, good trade agreements, and quietly being busy in the background while there might be a lot of bluster from elsewhere in the world, just getting on with the job. I think that's helped a lot. Australia, resources in Australia as well. That's a big resource country. So yeah, there are some countries that will be doing that. They've all got the same challenges. The main
Yeah.
challenge is us. What what do you want for you and your family, Melvyn? What do I want for me and my family? Do I moan when all the lights go off at 11 o'clock in the evening in the street or midnight or whatever else? Do I think they ought to be on until 2 in the morning? How much am I going to get upset about that? Will I complain about that? Am I going to write to my MP about that? Because we want, don't we? It's just human
Yeah.
nature. We want this, we
We all
want that,
want.
we want the
We
other.
all want. We all want. Yeah.
It's whether the government and the country is successful enough at any particular time to be able to manage those wants and needs. There are things we need and there are things we want. First step is obviously covering all the stuff that you need, and then you move on to the want stuff.
And advice for clients at this time, is it to still be cautious, or should we look for opportunities?
Bit of both at the moment, actually. So definitely don't panic. That because long-term investing, things go down, things go back up again. So the first and foremost thing is don't panic about what's going on, and don't rush to pull everything out and run away because of what's going on in the world at the moment, because you'll consolidate any losses that you might have seen in recent times. So you have to be really, really careful with that. Take advice, preferably speak to somebody or an advisor, if you've got an advisor that takes into account all these macro issues and positions their portfolios looking forward rather than just looking backwards, which most retail investors unfortunately tend to do. They look in the rear view mirror and say, oh, that's done really well, I'll invest in that. But you might be buying something quite expensive at that point. So don't panic. Talk to your advisor, particularly if you've got one that's taken into account all the macro issues that are going on. That's helpful. There are certainly, for money-minded clients, we've been quite defensive over the last couple of years or so, and that's paid off really, really well at the moment. And it's nice to have some cash to look for those opportunities. Reassure yourself that the fact that what goes down will in turn generally go back up again, and don't make knee-jerk reactions based on what's going on in the economy and what's going on in Iran. Actually, those kind of decisions can be the ones that cost you the most, because they often end up becoming emotional decisions rather than thought through decisions.
You won't thank me for asking this question. Tax year's coming up, end of the tax year, and it is a reminder, if somebody wants to invest and is a tax advantage, things like your ISAs and that, make sure you've got them in that tax year.
Absolutely, yeah. And you've got a couple of weeks. At this point in time, we always trying to get our own clients to let us know that they want to do that February time. So we've got time to get it all processed and sorted. But at this point, especially considering that April the 6th is a bank holiday, so it's not even the first day of the new tax year. The banks aren't even open that day. And it's Good Friday the week before. So you've got even less time this year than normal. So if we're rushing to get an ISA in before the end of the tax year, cash ISA in the bank, no risk, just get it done up to your 20,000 at the moment. That's still available for all before the end of the tax year. You can always move it afterwards in the new tax year. You can pick up one ISA from one place and move it to another and still keep all the tax-free wrapper in place. But definitely sooner rather than later, online banking, online cash ISAs is probably the way to go at this point. Get it done at the weekend. Get it done certainly within the next 5-6 days, I would say.
I'm saying get it done now.
Yeah.
Ray, if people want to know more, is there a website we can get more information?
Yeah, thank you for asking. www.money-minder.com. There are various news articles. This podcast will be available on there from a link as well. There's also the Money Minder TV YouTube channel, where it's really helpful to have subscriptions on that, because it helps the channel grow and gets more people to be able to see what's going on. And please share as well if you found what we've spoken about today helpful, so that other people can see it. too. So it's website www.money-minder.com, YouTube, Money-Minder TV, and also the office 01529 300 300, and we'll be happy to help wherever we can.
Ray, as always, thanks very much indeed.
Nice to see you, Melvyn. Take care.